Right. Do this. What's up, everybody? Spencer Israel, Stock Market TV. That's Jeff Macke. This is Jeff Macke live. Mr. Macke, apparently we're 64 days away from Christmas. Is the countdown officially on?
The countdown has been on for at least a month, Spencer. I mean, 64 days. We're 2 months out. We're two and a few days. But yes, of course, the countdown is on. It's right. Fully here.
Okay, the countdown's fully here. All right, let's run through topics today. We're going to talk about Netflix. They reported after the close yesterday. We'll talk airlines. A bunch of them will report later this week. We'll talk Dick's Sporting Goods. We'll talk memes. Memes are back on the menu, Jeff.
Yeah, they are. And it's not going to end well because it never does.
And I know you spent the morning trading Mattel. So let's start with Netflix here. This was the big report after hours yesterday. It is down a little bit this morning. The numbers came in. The headline numbers came in a little bit below estimates. Because Netflix blamed basically like a back taxes dispute they had with Brazil, where they didn't think they had to pay these taxes, and then it turns out they did have to pay the taxes, so they have to pay like 3 years or 4 years worth of taxes in one shot. They said if it wasn't for that weird tax thing, we would have met our numbers. But the stock is down down 10% today. However, no, not however, we're at the low of the day as we speak here. So the report, I guess, from a headline perspective, the report was not good. They tried to spin it, say, oh, this is a tax thing, it's not a big deal, and we're still doing live sports and advertising. What did you think, Jeff?
I think that Netflix is a really tremendously good company that other people are finally catching up. No one gets to be a monopoly forever. The free market, as it turns out, works pretty well. Message to New York, who's going to, go its own way in terms of the way capitalism works. But, Netflix has kind of dominated this space. They've been synonymous with fresh content that people want to see for a really long time. And they've had a huge run, and that's not going to go away. But as we've spoken about time and time again, Spencer, you want in the content streaming wars, you want to own the arms dealers and not necessarily the people at war. And Netflix is slowly becoming kind of a company at war. Content prices are going to go up. Other people are getting better at this. We heard all kinds of good things about what I wanted to hear, specifically TKO, a company we talk about a lot. They sell UFC, they sell boxing. They've got a little kind of a piece in all of that live streaming stuff that Netflix wants to go to, but they're not alone. You got Larry Ellison and his young little warrior, his kids out there. They're bidding for content. Everyone's kind of buying their own platform because they see that Netflix just dominates the space. It's not necessarily great news for consumers. Netflix has earned a rest as a stock. I still like the companies like TKO. I like the people that are making the content that is going to be part of our streaming lives. But for now, anyway, it's just not an endless expansion story. Once everyone has once everyone's streaming, once you have the entire world watching Jake Paul beat the crap out of who knows who, you're kind of at a top there. Or at least just running out of new eyeballs to see. And that's the real story. It's not so much that Brazil is going to charge them taxes. Netflix can afford that. It's that they don't have a lot of worlds left to conquer. Doesn't make it a bad stock even. It's up 25% year to date. So boo-hoo, you're down 10% today. But if you're looking for a catalyst that's going to drive it super higher, it's the K-pop people or whatever that is. They're doing huge. That's great for the people that make the toys. We'll talk about them momentarily, but it's not necessarily, it's expected for Netflix. And at this point, and they don't have a lot of great news in the pipeline. And that's going to be a theme that we're seeing in a lot of the companies we're going to talk about today and for the rest of the year. It's going really well for some companies, but no one's willing to pay a higher multiple for the stocks, just in the face of kind of lunatic policy and the fact that the stocks have been on a major heater. So if you're long Netflix for, if you bought it before, say, yesterday, you're probably money ahead and you should probably stop whining. If you're looking for put money to work today, you should probably look at the content providers rather than the people that are screaming.
Yeah. So what you're saying is, the Netflixes and the Disneys and the Paramounts of the world they're in this sort of Thunderdome, this battle royale fight to the death. You would rather be looking at the people that those companies are paying, people like TKO or I'm trying to think of maybe Mattel, for example, which we're going to talk about in a little bit, rather than the actual content providers, like you said. So
Well,
let's not forget, Jeff, Netflix, the stock in a 3 year span, June 22 to June 25, stock is up 700%. For a company as large as Netflix, that's got to be one of the biggest moves of all time, just in terms of market cap expansion, right? It's huge.
oh, just absolutely fantastic,
Yeah.
and just beyond reproach in terms of their execution, in terms of how well they've done. So you want to say it's a little bit of an overreaction, maybe, but it's not the kind of dip that you need to run out there and buy, because after today, now it's up. If it was up 700% over the last 3 years, now it's up 690%. That's not really what dips look like. Dips they tend to be a little more painful than that. And so, there's a huge buy at 1,000, down 10%. It's kind of a boohoo headline story. I listened to the call last night again. It wasn't a tragedy. There weren't a lot of metrics missed. There weren't a lot of things that you would not want to see. It's just, I mean, they aired the most seen boxing match between males ever in the history of pugilism, which dates back maybe 4,000 years. It's a pretty nice accomplishment. It's not the kind of thing that you're going to buy again. I'm not sure how many times they can redo that. So, yeah. It's fine.
I'm just cherry picking numbers here, but if you go from the very low in 2022, Netflix was worth $74 billion, and then fast forward to June of this year, it was worth 569 billion. So from 74 to 569 billion in 3 years is quite a remarkable growth story.
And again, this is how capitalism works. If you stumble on a really good idea, I mean, Apple TV, for instance, to name just one deep-pocketed competitor, Amazon would be another. Those are two guys with a lot of money that are throwing cash at the basic idea of what Netflix is doing. And eventually they're going to figure it out. Particularly with how few different, expensive things. Apple can't do AI worth of crap. They haven't invented a new iPad in about 1,000,000 years. They've got a bunch of perfect products, but they're terrible at streaming. They're going to figure out streaming. Their content's going to get better than it has been in the past. And more to the point, if you're a production company, you're selling to these guys. There's no real kind of credibility or a ratings bonus to be on Netflix. That's not the way it works anymore. You go out to the highest bidder with your program. Netflix has been the highest bidder, but they can't be forever. And so it's fine. It's a great headline stock because there's real pain being felt by folks, again, who are long on margin and they bought on Tuesday. But if you've actually owned this thing for a few weeks, it's one of the few kind of nesting stocks that we have left over from the great shutdown that has actually just kind of kept chugging away ever since then. No one is really staying home all weekend or for an entire year at a time anymore. But Netflix chugs merrily along.
Nope. And like you said, there's just only so much you can grow. They're not even telling us how many subscribers they're adding. They're not breaking out the advertising revenue yet. So
yeah, it's once companies start changing the metrics they want to look at, that is a huge red flag. And again, you'd like to make a huge deal out of it, but it's just not. This is just kind of the setbacks that maturing companies see. And so if you're looking for growth, look elsewhere.
All right. Speaking of growth, what about Mattel here? This is an interesting one. I was surprised to see the stick that big after hours last night. We're recording this, or this is airing live, I should say, on Wednesday. So Tuesday after the close, the stock closed at $18 yesterday. It got down to $14 in the after hours session. We're back at 18 as we speak here. So I know you were getting down and dirty in this today. What were you doing exactly? What were you thinking?
I was buying some. It's folks who actually are paying members of our little offering here. They were alerted to it. It was just a raging buy, and I'll tell you why. This was, they took a pretty substantial hit last night because their numbers were weak, but I was listening to it mostly because I wanted to see how Christmas is unfolding for these retailers. Mattel's a great example. And what they told us is that retailers are deferring a lot of purchases, or they did in the third quarter. They're chasing product in the fourth quarter, whether it's because of tariffs, when they take possession of the goods, when they take tariffs, whether it's because they were kind of betting on a recession coming. Who knows? But I'll tell you one thing. If you're an actual merchant, you can't be out of stock on your toys at Christmas. That's a huge party foul. It's the kind of thing that really ticks off parents. And Mattel's going to have a huge fourth quarter. And so what they did yesterday was they missed on the third quarter, and they said, listen, management was kind of semi-giddy in terms of their full year forecast, which is tantamount to, and they're taking up their estimates for Q4. That's good news. That's not a miss. And so you see a stock like that down 15% on what really isn't a miss. You're just moving orders from one queue to another. It's not bad. On top of that, I think they sandbagged Q4 because you have really desperate buyers out there that are going to need to buy all their little G.I. Joes with the Kung Fu grip and every other toy that you need just to have in stock. And they're going to be buying it late. They're buying it in early October, which is very late to be adding to your Christmas inventory. If you're a merchant, 64 days till Christmas. That was a little shout out to the Targets of the world, whose toy departments are horribly understocked. And turns out the customers are going to want to buy again. The underlying bet here, Spencer, as it has been for the last few months, and as I keep hearing from the banks, we saw them talk last week, to a bank, they said the consumer's strong. You can always kind of kvetch about what consumers are saying, how they're acting like, they're pretending they're going to behave, but they want toys. Demand is strong. The consumer is strong. They're buying things. They're buying products. That is unflinching. And you can argue that's going to stop at some point, but it's not going to be at Christmas. Mattel makes 40% of their earnings, over 30% of their revenues, all in Q4. This year, those numbers are going to be bigger. And so not only I didn't think Q3 was all that bad, but I think Q4 is sandbagged. I think they're going to have a pretty good year. And that's good enough for me. These guys also make the K-pop demon hunter things. I don't know. I'm an old man. I don't watch this crap. You're going to have it inflicted on you soon enough. Your child is sensate and able to operate the computer, which is sooner than you think. But these are must-have dolls. Those come online not until next year. But in the meantime, they're going to have the toys that people want, and they're going to be selling them to increasingly desperate retailers who are going into Christmas understocked. It sets up for a really nice quarter. Now, if you look at Hasbro reports later this week, and so that's kind of your real headline there. Hasbro is a little bit better company, and they're not shaking off. Mattel's still digesting a lot of Barbie demand. So I'm not sure we get the kind of dip. I don't know that we get the opportunity that we saw in Mattel today, but I would expect them to report almost exactly the same quarter, which is expected to be a little light on the top line for Q3. And just a lot of pent-up demand that they're meeting as fast as they can for Q4, which is a nice setup. It's all about dislocations. You can't necessarily be faster than the algos when it comes to the headline, which is why you saw that huge dip. But to the extent that was added to by sentiment and actual investors selling, you can be faster than the people. And I'm telling you right now, if you see a disappointment from Hasbro tomorrow morning, it's more than likely going to be a buy, because I think the consumer is strong enough to carry it to pretty good results.
It's interesting that Hasbro is clearly far more volatile stock than Mattel. Same business, but
I mean, it's there's not a huge difference going on there. But what these companies are also doing, Mattel talked about it, Hasbro will as well. They're creating their own content. They're fueling the machine that is streaming. So the more players that come on board, what's bad for Netflix is great for these toy companies because they have IP. Because they can say, hey, you want a G.I. Joe show? Turns out you guys are streaming a zillion hours of content a month. So we'll make a crappy CGI G.I. Joe type of program. And, it'll make bank for you. It'll capture a bunch of eyebrows or eyeballs, not eyebrows. Eyebrows are a whole different thing. But it's adjacent. They're in the same basic facial portion. But your point is, listen, if Hasbro gets you down 10%, I would take the opportunity to go ahead and buy. You folks at home can figure out how to get long after hours or whatever suits your need. And it's going to be an opportunity in a market gone increasingly kind of a little bit bonkers. It's nice to be able to buy dips in good companies, or at least stable companies. Neither one of these sets the world on fire over time, but they'll be fine.
All right, let's pivot here. Let's talk airlines. We
Yep.
had Delta report last week. Then we're gonna get here this week. We're getting American. We will get Alaska, and we'll get Southwest tomorrow. What is your opinion here? Is this group even investable right now, Jeff?
I kind of consider them almost never investable. It's of all the things that people quote back to me. I used to always say, if the market's open, it's a great day to sell airlines. That's not necessarily true anymore, but it's not necessarily wrong either. They're much better companies. They've gotten much more efficient. But at the end of the day, Delta's about as good as you're going to get. They are cranking. They figured out how to monetize seats better. The rotation from just having miles worth abstract things to sort of make them easier to monetize has been just a boon for them. The credit cards have been a boon for them. They're making billions of dollars, but we've heard from the class of the operation. Alaska and sort of the riffraff that we're going to hear reporting of the next couple of days, they might be fine, but they're all just trading one big, huge clump of it's a super tough business, and geez, someday we're going to have a recession. I don't know if you've traveled recently, but airlines are a really nice tell in the sense that if business is good, it's packed. It's really easy to tell when things are good at the airline because going on a flight is just a hellish experience. You're sitting with someone basically in your lap, kind of spilling over your seat. It's possible to get a drink, and the terminal's packed. That's where we are right now. And these are the salad days. And as a result, if you were smart enough to see them coming, you're up 4% for the year on your American airline investment. So the risk reward is not so bueno.
All right. I agree with most of what you just said. Airlines are typically it's not a good business to be in, right?
I mean, it's fine. It's just heavily regulated. It's hard to explode to the upside. Again, Delta's just doing incredible. I mean, I think billions of dollars, and so it's fantastic. There's a reason that the LBO guys used to love them so much, because you actually can crank out a little cash. You just can't make a great public company. They're incredibly vulnerable to almost any wavering that you have in the economy. And that's the sort of Damocles that's hanging over the entire marketplace right now. It makes it hard for the retailers to break out. I know we're talking about the big box stores coming up here. You're seeing them sort of top out. The good ones, the bad ones, just all of them. It's really hard for the entire group to get much higher, to generate higher multiples, even though earnings have been good. We're having a really incredible earnings season so far. Over 80% of companies are beating the estimates handily, even accounting for sandbagging, which companies do just because they're smart. That's pretty good. Right? I mean, it's no one is coming out there and saying things are bad right now. The economy is actually churning along really pretty well. Kings or not. It's whatever kind of republic you think we live in.
Well,
it turns out it's a lucrative one.
You always talk about how companies will kind of copy whatever the leader in their group says, but nobody wants to be the first one to come out and say, "Oh, things are tough out here," because the banks came out and said everything's fine, and if the banks say things are fine, nobody wants to contradict them, right? because the banks theoretically they would know, wouldn't they, if things were not fine. So
the financials are the ones that actually have the credit card data, and so right. they're looking at how people are spending, and it's to a group. The spending gets kind of reduced to everyone's just an idiot. We're all it's very tempting in the analyst world to just say it all has to end in tears because people are going out on ridiculous credit and taking out loans at 20% on their credit card debt. No, they're not. It's human beings are actually reasonably smart and reasonably rational. And if the spending is pretty good, again, not great, but we've priced in lousy. We've priced in for the last few months, we've priced in the idea that Q4 is going to be a nightmare. Once the Q4 results come out, it's going to be, but what have you done for us lately? That's mostly just kind of nattering the bobs of negativity rather than as actual economic fact. And so you can kind of pick and choose. And to me, the opportunities again are not necessarily. I would rather buy something and hold it forever because the tax treatment is just much better. But right now, you're seeing trading opportunities or at least entry points in some companies that come out again, and they just pull them a tell and they say, listen, retailers push their orders back. Now that makes sense. That dovetails rather neatly with everything we've been talking about, or a lot of the different themes that we've had. And it sort of makes sense. If you were running a retailer, you'd delay your orders too. But you would also then realize that it's 64 days till Christmas and you don't have nearly enough American Girl dolls in stock. You need to get them. If you're selling those, that's pretty good. That's a nice time. I see you're desperate. And so the price is now full price plus 20%. Thanks for playing. We'll see you next year.
Let's talk a big box. I know you went to Dick's Sporting Goods recently, and we'll talk about that. But as a group, this right here this is an equally weighted index. So every component is the same weighting. So Walmart's not going to have a disproportionate effect, but a Walmart kind of sticks out like a sore thumb here because Walmart's been great. The rest of these have not. What gives?
And they're expensive. It's Walmart is kind of the best of breed and trading at 35 times earnings. Now, even if you kind of, they're trying to break out, they're doing a decent job of breaking out. We've talked about Walmart and Costco ad nauseum for companies that aren't that exciting to trade, and they're just not really getting that much traction. And that's mostly a function of the expense. But I do think there are opportunities, which brings us back to Dick's Sporting Goods and kind of just what you can learn.
Here?
What's that?
What's the opportunity here?
Well, I think the opportunity here is I think that this is a decent candidate to break out higher. They're super exposed to tariffs. Most of the sporting goods you're going to buy have some sort of exposure to China. But what Dick's has going for it is they have companies like, take Nike as an example, and that's because I went out shoe shopping with Mrs. Macke last night, but you can pick almost any product you want, whether it's golf shoes, archery, whatever. And you see a situation where we know Nike's the behemoth there, $100 billion market cap, 50 odd billion a year revenue. They spent years ticking off every single merchant, Dick's included, and saying, we're going to go direct to consumer. Now Nike's trying to win back shelf space. And when you go into the stores and you actually talk to the people that are selling the shoes, you realize that the ons that they're carrying are at $220 a pair, and they're selling as fast as Dick's can possibly get them in stock. Literally can't stay in stock. Nike is fighting with about $180 lower margin for the retailer, less exciting for the consumer. It's not something no one runs into the store and says, geez, I need the Nike women's Vapor 12 tennis shoes in there. Mrs. Macke is not representative of every single consumer on earth, but she wants something cute and kind of functional. And we end up buying $220 court shoes as a result for a sport she doesn't even play, which is pickleball, just because they're the nicest looking and they just kind of feel the best on her feet. And Nike seems like kind of a low class brand. Again, it's all about who's in the power position. This is kind of the inverse of what you have with Netflix, which is, they're in a position where they have to go out and bid for inferior goods. If you're Dick's Sporting Goods, you have maybe 45 to 50% of the U.S. share of people selling shoes after everything that's gone on and the control of Foot Locker that they've just taken. You're in really the power play there. Their margins are going to be good. Their Christmas is going to be good. The results will be better than expected. And the worst case scenario just hasn't played out for them in terms of what's going on with the consumer. They have the headwind of the tariffs, but there's no better tailwind than consumer demand. And right now, if you're Dick's, you just you're in a position where you can kind of pick and choose among the vendors. They're all desperate to get into your store, and you can decide who you want to carry. They're simply doing a better job in the sporting goods world than anyone else. I think you got a nice base there. I think that Nike versus Dick's spread, I was kind of surprised that these stocks were even that close for the last year, because one of them is just doing so much better than the other and largely at the expense of Nike. So, it's the Nike turn gets much more chatter, much more buzz, and eventually someday maybe there'll be a bigger trade as Nike rediscovers its mojo, but the mojo is nowhere in sight, at least from the store visits that I'm going on. And in fact, from the numbers, it's for a company that says innovation as much as Nike does. And I counted, it was a quarter, maybe 4 quarters ago, they used the word innovation some 50 something times in the conference call, and they're still making the same shoes. They actually came out with jorts. One of the things they have, jean shorts. That was their innovation. and pickleball shoes. So we'll see when they actually invent a shoe that is not just some geeked up running shoe that makes you run 3 seconds faster if you're doing 2 hour marathons. Then I'll kind of buy what they're selling. In the meantime, it's the house of Air Jordan, and it's really hard to sell $50 billion worth of those every single year.
If you're looking for a stock that hasn't gone parabolic since, I mean, it's up 40% from the Liberation Day lows, but it's down for the year, right? It's down like 2% year to date. So if you're looking for stuff that hasn't gone, Dick's has not left the station. So
nope, it really hasn't. And they've gotten much better. They're going to earn much more than people thought. And speaking of parabolic, man, things have gotten weird in the marketplace lately. So seems a little broke.
Let's wrap it up here. Let's talk about some memes. We got a group of consumer stocks here. Beyond Meat, 1-800-Flowers, Krispy Kreme. All kind of doing meme things. Beyond Meat, I was surprised to find this out, Jeff, is still a billion-dollar company. Well, actually, no,
Crazy.
that's probably taking into account the last few days. It was not $1 billion last week. So, but 1-800-Flowers today, at least as I'm looking at it, is $300 million. Krispy Kreme, $600 million. These are smaller companies. This is a wonderful chart you drew here, Jeff. I can't help but think that this almost seems like it was intentional by the market gods, right?
I mean, it's they drew the chart for me, Spencer. It was
Yeah.
nice. Normally, we get the Christmas tree of death, which means you get kind of a slow rise that spikes up and then it kind of gives way in a gradual sense. Not so much for 1-800-Flowers, which, to your point, no one really remembered that it existed. That was over $8 a share. From it opened yesterday at 460, closed at 525, and I was like, geez, that's a huge rally for this company. Who knew it existed? It was $8 pre-market today. It was at 7 earlier, up 65 some percent. Last I checked, it was down 4%. I'm sure it's much worse. It takes a little while to draw the little cartoon there, but yeah, this is the row stem of death. It's a brand new chart. It's for stocks that just go this spiky. Again, I don't even know if 1-800-Flowers, who's paid attention to them in ages. They were left for dead. It's literally a .com relic. It was one of those companies that instead of 1-800-Flowers, will be flowers.com. I mean, 1-800, like who the hell orders their flowers this way anymore? But I don't know what the catalyst was. I just know when you see something go up 400% in a day, there's a really good chance it's going to give it back. It's normally not this cruel. This chart took all of 2 hours to play out. It was literally just, we're going to dump shares as fast as humanly possible to the people buying it out. So, 64 days till Christmas. But I tell you what, if you are a long suffering 1-800-Flowers shareholder, Christmas was this morning, and it lasted from 6:30 a.m. Pacific time till about 6:45 a.m. Pacific time. And you better have celebrated then, because if you didn't, that train's not coming back.
This was a $4 stock yesterday at 3:30 p.m. Eastern time. It was a almost $9 stock at 9 a.m. this morning. We are now back down to $4. So from 4 to 9 to 4 overnight. These kinds of things happen all the time, pretty much every day.
Yep.
It's just not often you see it in like you said, a .com relic, right?
And it's been picking up steam. You get a lot of FOMO. It takes a confluence of sort of just investors getting desperate, investors wanting a taste of this. You pick infinity spouses asking infinity day trading spouses why we don't own stuff like 1-800-Flowers to create this type of price action. But it always ends in tears, like 100% of the time. And today it did again. It doesn't matter how often you really warn people about it, but it is a truly cautionary tale. It's super tempting to chase stuff that's 400% higher because maybe it'll go to 1,000% higher, but probably not. And whoever ran it up higher, they knew more than the folks at home. Yeah. So be careful out there. It's not a sign of a super healthy market. The market is showing some cracks in the fissure. This is usually a good indicator that maybe it's time to take a little pause. October is traditionally the month of crashes and bottoms. You're seeing it really kind of tightly consolidated this time around with a lot of AI stocks, and now it's rotated into just the absolute dregs of the universe. And that's where 1-800-Flowers lives right now. Probably perfectly nice people I like flowers. I got some flowers for the aforementioned Mrs. Macke this weekend. It's a lovely gift. Lousy stock.
This is a reminder that there is still ample risk appetite in the system. And as a reminder, these three stocks we're talking about, flat 100 Flowers, Krispy Kreme, Beyond Meat. These are all stocks with a relatively low float. 100 Flowers has a float of 31 million shares. Krispy Kreme's float is 85 million. Um, Beyond Meat's share float is 62 million. So, relatively easy to push around if you're a big player.
And just people
And
who hung around short too long. I mean, honestly, it's the
I
short thesis on 800 Flowers. That was during the COVID thing. I gave the Beyond Meat rather. I made a bowl for my dog during the lockdown, because that's the kind of thing you would do to waste time during the lockdown. I handed it to a bulldog. My bulldog refused to eat Beyond Meat. Which, Spencer, I tell you what, bulldogs refuse to eat nothing. The dog once ate a little tire. She's eaten a Hot Wheel before. She is not a particularly discerning animal. She just kind of took a sniff of Beyond Meat and said, "This isn't food." And that's going to be the case. Meat works better than whatever Beyond is made of, and always will. So yeah, this was not a hard one to see coming. It's just sad that people got involved.
And just a PSA, if you are short a stock that is in the midst of a 95 to 99% drawdown, what are you doing? Right?
You don't add to that
right?
position. The holy grail of shorting is it just disappears. You don't even have a transaction. The company just kind of goes poof, and it goes to money heaven. Egghead Software was one I had like that. Particularly proud of that. That was nice, but that was also 20 years ago. So yeah, it's if you were shorted for 95%, you probably had your profits, and this was just a curiosity. If you're shorted it at $3, yeah, what the hell are you doing? You're late to the party.
Yeah, I mean Beyond Meat, literally in a 99% drawdown from its all-time high. So best case, like let's say you shorted the stock like whatever 2 weeks ago. Best case scenario, the stock was 60 cents. What are you doing, right? I mean, best case scenario, you make 60 cents on the downside. Worst case scenario, it rips to $4 in your face. You know what I mean? And that's
declare victory and go away is the answer to
yeah.
that. That's how that works.
Question from the chat. Casey wants to know if you think the volatility is going to calm down. I guess it depends what you're looking at, Casey, right? Volatility in what sense? In terms of like the things that you own, in terms of the overall market? Because the volatility of the overall market is not especially high. It's a little higher than it was, but it's not especially high right now. The VIX is at 20, right? So
yeah, we've kind of beaten the risk out of it. It hasn't been, we showed those airline charts. Those aren't volatile. They're Delta's business fates have improved quite a bit, and it's up 12% or something for the year. Things are pretty calm. It's just misleading in terms of 1-800 Flowers is a name people have heard of. Beyond Meat, name people have heard of, and there's a ton of volatility going on there. That has absolutely spiked. There is some chasing going on, but for the most part, professional investors aren't really dabbling all that much in them. It's a sign that people that are kind of new to markets getting involved. So Casey, yes, it will die down a little bit, but if it's kind of too wrenching to you, it's probably a chance that maybe you should preemptively have it die down a little bit yourself, take some gains, and just get out of Dodge. I mean, it's 1-800 Flowers. I would be kind of surprised if it saw 9 again anytime in our lifetimes. Maybe just it's a nice opportunity to buy flowers and send them to a friend who got long this morning.
Look, we've had a very clear unwinding of the like quantum AI trade in the last few weeks here, right? All those stocks have sold off, and that's what happens, right? You get these stocks that are up 100, 200, 300% or more this year. They're going to crash 50% in a week. Sure. That's what happens to names like this. So you got to have
your best case scenario is like a Carvana. It's something that just kind
Yeah, but
of.
how
But
many
even in those
Carvanas
cases,
are there, Jeff? That's such a
there's just the
Carvana.
one. That's what people are telling themselves right now. If you're long, 1-800 Flowers is, oh, there are plenty of pullbacks in Carvana on the way out too. That isn't this.
All right,
Those are
Carvana
different
from
entities.
300 to 5 to 400. That is an all-time round trip right there. If you have the stomach for that, more power to you. You're a better investor than me, but
Yeah.
I don't.
Yeah, and you better be, because if you have a basket of those stocks, it's going to take an awful lot of Carvanas to shake off the 1-800 Flowers that you bought at 9 this morning.
Yeah. All right, let's get out of here. Jeff, I was watching the video that you did with Sean the other week that we're going to release here in a couple of days, and it is awesome. So,
Excellent.
guys, stay tuned for that. And if you are a member of Mackey's portfolio, you'll get your weekly video on Friday, as always. If you do not know the stocks that Jeff is buying and selling, and holding in his portfolio. The only way to find out what those are is by joining the Macke portfolio. The link is in the description on YouTube. If you just want his free stuff, that works too. The link is there as well. Jeff, thanks a lot as always, and we'll talk to you next week.
All right, Spencer, take care,
All
man.
right.